So how do you buy and sell options on Robinhood? In this video, I'm going to walk you through how to profitably trade options on the Robinhood app. Hey, how's it going? On this channel, you will learn the steps it takes to make a full-time income trading in the stock market. So if you're new here, consider subscribing. And at any point in the video, feel free to check out the notes and links in the description below. I'll list out any valuable resources down there. Now today, we're talking about trading options in the Robinhood app. Just to let you know, this is the Android version. There might be a few differences on the iPhone, but hopefully it's relatively similar. So I'm gonna actually do a trade in AMD because I know plenty of people in Robinhood love trading AMD, so I thought this might be a good example. So to get to trading options, you're gonna click on the trade button at the bottom and then just click trade options. And that's gonna get us into the options area of the Robinhood app. Now, it actually comes up with a quick explanation on how, if you think it's gonna go up, you wanna buy calls. And then if you think it's gonna go down, you wanna buy puts. But because I'm gonna walk you through selling credit spreads, it's kind of generally the opposite. So if we think that AMD is going to go up, we're going to want to sell a credit spread, a put credit spread. And then if we thought it was going to go down, we would sell a call credit spread. So it's kind of flipped. And so that's definitely why options can be relatively confusing when you're first starting out. So for this, AMD I think is down like 17% right now. So I'm going to say that, well, AMD's come down a lot and the market's kind of bottoming out too a little bit. Maybe it's going to bounce here. So let's try and sell a put credit spread for some profit as it bounces up. So up here at the top, there's the options expiration dates. And so right now it's October 25th. So we're going to want to go out a few weeks. We don't want to sell tomorrow's expiration because that's really risky because it's such short time. So we're going to want to go out a few weeks. Let's go out to November 9th. So to sell a put credit spread, we're gonna have to buy a put and sell a put at the same time. And so to make this a credit spread, we need to sell a more expensive put and then buy a less expensive put as protection. First, what we wanna do is we wanna make sure we're selling a put first, and then we wanna come up here at the top right and click select. And then this is gonna bring up a little box on the side so we can pre-select a put that we wanna sell, and then we can change it to buy and then select a put we wanna buy as protection. So I'm just gonna sell the closest in the money put, and so that's gonna be the $20 put. And so then you can see that we selected that, and then I wanna click buy up here. And then that's gonna select it to, now I can buy a put as protection, so I wanna buy, let's just buy the closest one, the $19 put. And so that's gonna make it a $1 wide spread. And so next we wanna pull up on this, and then it's gonna give us more of a breakdown on what the prices that we're selling at that put. So we're selling the $20 put at $1.82 or $182. Right now you can see it's changing a little bit. And then the $19 put is we're gonna be buying that for about $1.26. And so that's going to bring us a credit of 53 cents. And then the total risk on the credit spread would be 47 cents because the spread is $1 wide. And so you're going to minus that credit you take in from the dollar to get your risk. So right now it's 54, we're taking in $54. So 100 minus $54 is going to give us $46 worth of risk. So you'll see up here, you can click edit ratios, and that just brings up if you wanted to have some more complicated spread, or if you wanted to buy more puts, you could change these numbers individually. But we want to just sell one spread here, and then clicking yes on that's going to take us to the next screen. If you didn't go to that ratio screen, just swiping up or clicking continue on that last screen would have got you here as well. So this is where you can actually change how many contracts you want. So if you want to do 5 contracts, this is how you would do that. We're just going to do 1 contract here because we're doing an example. Here you can see the bid ask price. And so the ask price would be 49. So we could get instantly filled if we put in 49 cents. And then the really hard price to get filled at would be the 54 cents. So Robinhood automatically looks like it goes to somewhat close to the mid price. So we'll just try and do the mid price so we get filled pretty quickly. So we're gonna say yes to that. It's gonna just change our order a little bit because it was at a funny number. And then here is gonna be your overall summary right before you put in the trade. So again, you can see we're doing one contract, trying to get filled at 51 cents. So our risk would then be $49. And then it's gonna take $100 collateral for this trade. So then just to send this in, we're just gonna swipe up and see if we get filled. So it looks like we got filled on this pretty quickly, so we don't have to go in and edit and change that, which is really nice. So if we go back into AMD, we can see that we have 2 contracts or our put spread option on AMD. Going all the way back out to our portfolio, we can scroll down and find that AMD position. And so if we click on that, so we can track the spread or the price of this spread. You can see that this spread has gone up over 60% in value today. And so maybe it's gonna start dropping in value. So you can see it's starting to go down in value, and that's really good for us. A credit spread, we wanna sell at a higher price and then buy back at a cheaper price. So we sold it at 51. So if this goes down to something like $20 or 20 cents in value, buying that back would be a really good win for us. So if we wanted to set that up already for the trade or the system to automatically buy this back for us, we could go down here and click trade, and then we can click just close position. And so this will just, because we already had that position selected, it automatically knows that we want to close that position, and it already has that we want to sell one. So automatically this will be trying to close it at the current price. And we don't necessarily want to do that. We just opened this trade. We're going to want to set this order and let it just sit there and wait for the price of this credit spread to go down. So then we can buy it at that cheaper price and make that difference of, $20 or $30. So what we want to do is actually change this limit price here to be, let's say 25 cents. And so that would be 50% profit on this credit spread. That's a pretty good safe spot to close this, and you're making good return on your money at that point. Now, to make this so this trade doesn't just close at the end of the day, we want to click this time up here. So this is time in force, and we want to click on that, and you see it has good till close. So that would make it so this order would close at the end of the day. And we don't want this order to close at the end of the day. We want this order to be there until it gets filled. So we're gonna wanna click never expires or good till canceled. That'll change it so the spread never gets canceled, and we can just wait for the spread to come down in price, and then we'll automatically buy it back. We don't have to be looking at the Robinhood app constantly and checking the price of AMD to close our position. It'll just do it for us. It's kind of like automated trading. It's pretty awesome. So just to send that in, we wanna click check, and then it'll give you this overview again, and we're just gonna swipe up and then send that order in, and that'll send the order in, and then it won't say filled again because this price is really low compared to where it's at right now, but the order will be sitting there waiting for when the price of AMD or the price of that credit spread does come down in price. Just click continue, and we can go back and see where the price of this credit spread is. Now it looks like it's gone up a little bit still, but again, we have a few weeks on this spread, so we can kind of wait it out and wait for the price to come down. Maybe, today we didn't buy the bottom exactly. It's gonna go down a little bit more, but the idea is over the next few weeks, AMD will hopefully go up and we can make some good return on this spread. Now to quickly walk you through buying a call spread, we're going to back out and then find AMD again, and then click on the trade tab again, and then we're going to want to trade options. Now this time, maybe because we think that the stock is going to keep falling today, we could do a really short-term trade. And then we're going to sell a call credit spread, and that's going to essentially short the stock. So I want to change up here to calls, and then I want to sell a call, and then again click select to make that box come up. And so we're going to sell an expensive call and then buy back a cheaper call as protection. So I'm going to sell this 20 and then buy this 21. So select buy, and then I'll go back to this, and then I can sell this whole credit spread for a credit of, let's see how much we get, because it's a really short time frame, it'll be less value. So we're gonna get about $14 or 14 cents in credit, or about the $1 risk. So this is definitely a more risky trade, or it has more risk on it. But again, AMD has to go up a lot in just 2 days for us to hit that whole risk. So you may have more risk if it hits the max loss, but the likelihood of you getting there is really low. So we're just gonna sell one of these and see if we can get filled at this $13 credit. Again, it's gonna take $100 collateral because it's a $1 wide spread. And then you can see, there we go, we got filled on this for actually 14 cents. So we have a $14 spread on that. And then hopefully maybe this will be a good strategy to short the stock today, because it looks like it might keep going down. But then overall, in the longer term, we have that way to profit in the longer term. Now I can go back to my actual portfolio here, and then I can see those two different spreads. And so if I wanted to, again, close those, I could just click on these, click trade and click close. Or I could just go back into the options chain again and view options if I wanted to, add on or make more trades. Hey, thanks for checking out this video. If you want to learn more about the Robinhood app, or just more about trading options or just trading in the stock market, make sure to subscribe to the channel. I'll have more videos out on Robinhood and how to trade options, so make sure to check those out when they're out. And if you have any questions, feel free to ask them in the comments below.